What's up, guys? Jeff here from LiveStream Trading. Today's video, just a quick one. We're going to talk a little bit about what happened today in SPY and the overall market, what the outlook is going into December, and we'll talk a little bit about how Powell's speech confirming that the central bank will slow the pace of its aggressive rate hiking campaign that's been weighing on the markets as of late. Let's roll the intro and get into it. All right, guys, so we've had some mixed biases coming into this week. Actually, starting out, one of the bigger things we were watching is the daily chart reversal that started to occur on Monday when we broke back under the daily chart trend. As a matter of fact, if you look back to this day here, we had the gap down, and on this day here it was fully short bias. And we kind of just continued on with short bias pretty much all week. We've been in this downtrend. It's been pretty obvious that the side that you want to be on is short, so not really playing too much on the long side, mostly short side trades, and a lot of good action actually over the last few days. Coming into today, definitely short bias, opening up in a short bias territory, but also really aware of the fact that we were pretty downside extended, so that there are possibilities that we're going to have some kind of a correction. And of course, we knew that Powell's speech was coming at 1:30 p.m. today, which was really going to shake things up. It was a little bit scary for shorts coming into this speech because there was such a large downside extension and such a large, bigger picture flag forming that really back over 395.40 is big trouble. And of course, after Powell confirmed that today they're going to be slowing the pace of the aggressive rate hiking, it did create a lot of short covering. I would say more of a short cover rally, probably a lot of new longs coming in around the 395 to 396 area. And that's what created the big squeeze today. So let's talk a little bit about what the long-term or the mid-term outcome is going to be based on what we're seeing from a technical perspective. Starting with the weekly chart, one of the things that stood out to me today, and we actually had three signals. Two of them didn't have good enough risk reward to really be worthwhile. We had a short early on today. Again, not a great setup, wasn't enough. The risk reward wasn't solid enough, and the pattern wasn't good enough there for me. It made new lows. Had a little bit of a long setup around here, same issue, just not good enough risk reward. Skipped that one. Stayed real patient today. Got a super nice short trade right in the middle of the day, just after lunch. Pretty much picture perfect setup for a fade all the way back to lows, basically like 20 minutes from that trigger point at 395. But of course, we had to clear that position out coming into the Powell speech. So coming into that 1:30 p.m. time frame, I choose not to be in positions during that time because realistically, we don't know which way the market is going to go, and we don't know which way that's going to behave. So what I typically do in going into Fed meetings is I'll wait until the dust kind of settles a bit, let the market make its initial move. And the reason for that is because as a day trader, typically I'm trading areas that have very tight stops, usually within 30 cents, especially on SPY. Probably at the very most it'd be 40, 45 cents, but typically they're going to be around 25 to 30 cent risk levels. And when you come into a Fed meeting, if you go back to any meeting in history, you're going to see that the vast majority of the time, we get a fake out in the wrong direction really quick, a big flush to kind of take those day traders out, and then it starts to move in the right direction. Today was no different. So cleared out all positions going into the Fed meeting. Obviously, the news was positive, and the market is reacting positively to it. But you can see right before the announcement, that big dip right there, that realistically would have taken out any longs that were using the higher low under VWAP as a stop. So don't want that to happen. So for me, I'm always kind of watching that economic calendar when there's going to be big news or big events come out. I like to be in, unless I'm thinking bigger picture. As far as actual day trading goes, I'm not going to be in a position during the time of the speech because that is 100% gambling. But once you get the direction established, and in this case, as soon as we ended up being with positive news and getting back into an uptrend on the daily chart, hourly chart, there's no looking at shorts anymore for the rest of the day. We're only looking for long setups. So what you can do is, if you're day trading, you can wait for the dust to settle a little bit, meaning you see the initial move, now the bias is long, and then wait for an opportunity where things tighten up enough to potentially give you a good enough risk reward area to try for a trigger. In this case, Probably a little bit, like under normal circumstances, this would be a little bit extended for a good long setup, but obviously these circumstances are a little bit different. We've got a massive amount of shorts that are going to be covering on the daily chart reversal back to the upside. The news, again, is fairly positive, so investors are coming back into the market, likely buying, and most importantly, probably shorts are rallying out of this because that is the last thing that a short wants to see, especially in a chart that's in a major downtrend for a few days straight with a major trigger point level that's going to create a lot of covering and new buying. So you can see here that we have made a significant move, very, very significant move in the last hour, and we're continuing on higher at the moment. So what I want to talk to you guys about now is what to expect going forward in December. So of course we don't know what the future is going to bring, but we do know a couple of things that are very interesting. One is today, if you look at a weekly chart, and this is more of a macro view, the pullback that we got today on the low point of today, and that was like basically right after the short signal that we had at 395. The low point of that was around 393.50, which coincidentally was a perfect test of that weekly chart trend, which ended up holding. And so obviously, guys, coming into this meeting with a flag forming and such a big possible setup for a massive short squeeze, we're not going to be short into that meeting, but clear out that short, and then we burst it back up over 395. Now that puts us back into an uptrend on the daily chart. So now we're actually looking pretty bullish across multiple different time frames. We've had a yearly chart pullback almost to the yearly chart trend. We've had a daily chart failed reversal back to the downside. That was obviously trumped by this Powell meeting. And here we are back over 397, 398. So the thought that I had today about an hour ago was, well, if we close over 398 today, we're definitely back into long bias territory. So my thoughts were essentially that if we start to see like a little bit of a correction over the next day or two, then we can definitely start looking back at long bias setups again, because we're, as a matter of fact, in an uptrend now on multiple time frames. The thing that I love though about day trading SPY is that, yeah, we're in a, right now in the macro view, we are, we've kind of broken, we started to sort of break back to the upside, but we're still technically in, if you draw like a flag line from the top of the most recent highs back in January 2022, before the bull market began, just at the start of it, we still have this flag line ahead of us. So my thought is that we could possibly rally up to around 410 and retest towards that flag line if the sentiment remains bullish. But purely from a technical perspective, we're at the point now where we may have a pullback for a day or two, but we're going to be kind of like watching for a continuation, maybe towards that 410 level, and then from there, it's possible that things could cool off a bit. We could start looking at shorts again. But the cool thing about trading SPY is that intraday, there's typically opportunities on both sides every day. So this is just a macro look. During any period of time between now and a few days from now, there could be both long and short signals. For example, today technically was a short signal pretty early on through this area here. I think the risk reward was a little wacky there. It wasn't my favorite spot. I decided to skip out on that one. And then I wanted things to get a little bit tighter for a long in here. So it's just a little bit off. Basically, guys, what it came down to was two signals today that were technically valid spots to either get short or get long, but just wasn't quite worth the risk reward to me. So we'll discuss those levels, but I'm typically not actually going to trade a spot unless I think the reward is far better than the risk. That's kind of what helps keep you in the game in the long term, and that is really kind of the secret sauce. As you can see, both those signals would have worked, but I stayed really patient today, and the one signal that I really focused on was this one here, where we were still kind of in a downtrend in the big picture. We kind of had this hourly chart trend was still on the downside. So I suspected any flags in this area would fail, and it gave us a really good opportunity to get one just really good nail trade there through 395, take it all the way to lows. Those are the kinds of trades where I'm looking for, where the risk reward is going to be astronomical. And those are the money shots right there. So again, coming into the afternoon, going to be tough to trade after that speech unless you're a little bit more aggressive. But the first thing you want to see is a good pullback, get a trend test. And then, like I said, is try to find a spot where there's a tight enough risk reward area that it makes sense to join the trend. So guys, we are in the midst of an extreme short squeeze here. The last of shorts in the near term probably got stopped out through that 402, what's it look like, 402.88-ish, right around that high there. So this rally might start to come to an end here, but another thing that just to keep in mind is if you're trading futures or indexes, on days like today, on events like this, unlike small caps, you don't, well, I don't look for shorts or reversals. I'm only looking for areas to join the trend. So the last 2 days, yesterday, the day before, those were short bias days. There was short bias signals both days. I'm going to be way more interested in looking for a trade like this to the short side, rather than trying to play something like this to the upside where I'm trading against the bigger time frame trend. Of course, now, like I said, that we're back into potentially an uptrend on the daily chart, probably going to be looking at more long bias signals and short bias signals over the next little bit. But obviously, with the large extension we got after this move today, we kind of need things to settle a little bit. So maybe we'll have a couple of days of consolidation and then start to see if we can ramp up towards that 410 area. Now, obviously, with the amount of people that are probably stuck short here, it's possible that this rally could continue, could get there a little bit quicker, but those are sort of the macro, or not really macro, but sort of short to mid-term ideas that I'm looking at. But mainly going to be day trading this volatility, which is just unbelievable lately. There's just so much opportunity, man. I don't care if you trade long or short. There are several spots every day that offer huge, huge amounts of reward, whether it's short here or, picking up long off the bottom when we had a setup down that way, or, better yet, was my favorite signal was definitely this for the short side today, aside from the obvious, which is joining the trend to the long side once Powell made his speech. So that's kind of a little bit of a look, guys, into what we might expect over the next little bit. Some key areas to keep an eye on. Obviously, 390 has been a big spot, weekly chart hold. I don't think we're going to see that level again for a while. Draw your flag line from the very top of the rally, drag it down. I suspect we could very well test up towards that level, maybe towards 410 in the near term if the sentiment remains bullish and no other news comes out that could conflict with that. And over the sort of shorter term, I'd like to see a little bit of a pullback over the next day or two, then start to see if we ramp up to set up that 410 test. If we end up rejecting off those levels, we might be able to start looking at sort of short setups again. So, but either way, guys, no matter what day it is, there's going to be likely setups both long and short intraday. But what you want to do ideally is focus more on setups that follow with the trend. So if you're in a downtrend, then you want to be mostly looking for setups where you can get short. Now that we're back in an uptrend, if we continue that uptrend, we're mostly going to be looking for long setups. Hope you guys found that helpful. Just a reminder, guys, today is the last day for Cyber Monday sales, okay? I forgot to give a reminder, so this is it. The coupon code's coming down tomorrow morning at the open. If you want to trade live with us, hop on in, check it out for a month, see if you like it. We got thousands of videos for you to check out. I'm sure you'll learn something, and I'm positive we can help you improve your trading. So love to have you. If not, stay tuned. We're going to still continue to update the channel with ideas here and there. So stay tuned, guys, and thank you for checking in. Have a great day. Cheers.